Today, traders talking about speculation is as old as the hills. So, interesting conversation after my video yesterday. I got a lot of emails and comments, and I appreciate that. Some great stuff, great feedback. And I received an email from a trader, and I said, you need to read Jesse Livermore's book, Reminiscences of a Stock Operator, with the all-time classic. It's the Bible for every trader. Should have a copy. Everything that he talks about in that book is relevant to this very day. Written in 1923 or 19, it's about 1920s. Written maybe in the 30s by Edwin Lefebvre. And this trader said to me, who never heard of him. Okay, so here's the thing. There's a lot of people out there who are surfing the internet and following gurus, and they've got this guru who's discovered these things, and they're the source of everything about trading. Go back and read Munehisa Hama, 1700s Japanese rice trader, original writer of the candlesticks, pin hammer. Go and find that. Three Monkeys, a Pot of Gold, Three Monkeys, I think it's called, I can't remember, Cicada. Google Munehisa Hama, H-O-M-M-A. Then go and Google Tulip Mania. So this trader hadn't heard of any of these things, and I have to tell you, if you're following some guru, which I've never claimed to be, I just share my experience and what I've learned through the School of Hard Knocks. But go and Google Tulip Mania. There's a book called Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay, written in 1841. Did you hear that? 1841. No, it wasn't discovered by your guru 10 years ago. So he talks about Tulip Mania. And if you don't know, I'm not going to go into that. Go and read about Tulip Mania. One of the first massive bubble markets, tulip bulbs in Holland. And then fast forward to the 1920s, Larry Livingston, aka Jesse Livermore, Edwin Lefebvre, Reminiscences of a Stock Operator. Read that book, and then you'll reread it. I've read it probably 500 times. I'm constantly flipping back through that book. Speculation is as old as the hills. There is nothing new under the sun, despite what your guru may have told you. Okay, he or she did not think of this. And the point I'm making, and I'm going to show charts down here underneath after, I'll add a second part to this video. I'm going to show the charts from 100 years ago, okay? And there's nothing new under the sun. We might have HFTs and algos, but they still complete the same patterns that are based on human psychology and behavior and emotional buying and selling patterns. There is nothing new under the sun. I talk about my favorite setup is the pump and dump. Okay? That can be a dump and pump. It's all the same thing. I'm looking for a market to come up 3 levels and dump. Drag volume, build volume, trap volume, and then boom, capitulate. I love that. It might only be a 25 or 50 pip box, but it might also be a third level on a 3-week or a 3-month chart, and we might be beginning a massive move down, as we're starting to see on the indexes. There's opportunities everywhere. So this belief that it has to be super complicated and you need to know all these little, complicated little things. I know that there's people who think that some of the stuff I talk about is complicated. The complicated thing is this: knowing what all the manipulation tactics are, the timings. It's not, you're misled to believe, Forex trades 24 hours a day, and when it trends forever, and blah blah blah, and indicators. But here's the thing: you can do all those things. My approach to the market is about capitalizing on opportunities with size to make money. If I wanted to just buy a trend, I could sit there with a 4-hour chart and buy something and maybe get 50 pips a few days later, or a day later, or 4 hours later, I don't know. But how could you put size on that? Real size that you can carry with the swings up and down. I'm talking about a market that's going to capitulate, and I can add size into and be be done with. I keep saying this, I don't care about being the smartest guy in the room. I'm not trying to prove anything to anybody, and I don't think anybody out there that I'm talking to wants to either. I think you're all looking to make money from the markets for whatever reasons, for your lifestyle, your family, all those things. Then, as I have done, what I have found has worked for me was recognizing to stop trading after I've made my trade, to get out of the market, because there are certain things that happen after the moves. They go back to building order flow, trading at certain times, focusing on setups for me that would capitulate, that I could put size into and not sit there back and forth through these choppy markets and swings, hoping that it goes my way. You know, risking 1 for 1. I don't even want to get into that. Somebody said the other day they don't care about asymmetrical risk reward. That's their choice. Everything, it doesn't matter what you do in the market if it works for you and it makes money. Now, the other part of that is I need to have low stress, simple, duplicatable models that I can reproduce. And that's all I've done, is build my playbook on simplicity, knowing what I can do, knowing what I can do again tomorrow and the day after, without this complicated analysis paralysis. And again, go back and read those 3 books. And you'll find out that there's nothing new under the sun. Somebody didn't just come up with these concepts. They might have changed the names on certain things and everything else, but the name of the game is to buy low and to sell high. And the objective of smart money is to transfer the money from the many to the few. It's the oldest game in Wall Street. Speculation is as old as the hills. Jesse Livermore, go read his book. 1920s, made over $100 million, I think 3 times or 4 times, lost it, made it back, lost it, made it back. That's in the 20s. Munahi Sahama, they estimate, was probably worth about 10 billion in today's terms from trading rice and drawing candlestick charts. So no, your guru didn't think of these terms that people email me. I don't even want to know. I don't care. I don't surf looking for other stuff. I'm not interested. I'm just focused on mastering my setups, figuring out which pair is going to give me the best trade, which instrument, estimating how it's behaving. Is it going to be a large move? Is it just a scalp? Whatever, get off the screen and get that to size that frees you up from whatever it is you're trying to go after. Quit doing other things. I'm going to put all the quotes that Livermore talked about in the 20s. There's nothing new under the sun. So hopefully you got value from today's video, traders. Had to give a bit of a rant because, you know, you see this garbage out there, and honestly, the more garbage I see like that, the more I just think, you know, is this is bullshit. It's bullshit. So anyways, focus on what works for you. It doesn't matter, all that other stuff's irrelevant unless it works for you. So make money with it or throw it in the bin. Have a great day, and may the markets go with you.